Welcome to the deep dive. So today we're tackling a real giant of the Japanese food industry, Maruha Nichiro, ticker 1333.
Right. And the goal here is to, cut through all the noise. We want to find the really counterintuitive things driving their recent results and figure out if these huge growth targets they've set are actually realistic.
And what's so interesting is this duality the company has.
Exactly. It's got these deep traditional roots in marine resources, but at the same time, it's pushing so hard to become this global comprehensive food company.
Okay, so let's unpack that, because the company we see today is really a product of some intense history. I mean, we're talking about a series of huge mergers that all led to this big consolidation and a name change back in 2014. But you can't really talk about that era without talking about the one event that didn't just change things. It's sort of redefined their whole reason for being.
You're talking about the AgriFoods pesticide contamination crisis. That was in 2014.
Yeah.
And it basically broke the company and forced them to rebuild from the ground up.
I remember that being huge news, even internationally.
It was. And it demanded this immediate, pretty radical response. Their reaction wasn't just, issuing apologies. They had to completely rewire their entire corporate nervous system.
How did they do that?
They set up a crisis management restructuring committee. And importantly, the president himself chaired it. The single goal was just to rebuild public trust. And that led to this new focus on what they called food safety and food defense.
Okay, food safety, that makes sense. But what is food defense? It sounds a little like security theater, but I know it's a real management philosophy.
It is. It's actually highly technical.
Yeah.
But really, it's about trying to anticipate and prevent intentional acts. Things like contamination or sabotage or even economic fraud anywhere in the supply chain.
So it's not just about accidents?
No, it's about securing everything, the physical buildings, the digital infrastructure, to guarantee integrity from, say, the fishing boat all the way to the freezer aisle at the supermarket. It's an expensive commitment, but one they felt they had to make to survive.
So the crisis forces them to look inward, to focus on security. But how do you pivot from that kind of defensive crouch into a structure that's actually built for global growth? This is where it gets really interesting for me.
Well, they pivoted almost immediately. In 2014, they brought in this structural overhaul they called unit management.
Unit management.
Right. They basically blew up the old rigid silos that they had for their legacy businesses, marine, food, logistics. And they broke the company down into 11 specialized units.
So instead of one big marine division doing a bit of everything, they created these, specific profit centers.
Precisely. And this included creating a dedicated overseas unit and a strategic sales unit. And look, this wasn't just moving boxes around on an org chart. It changed how they allocated budgets, how decisions got made.
It sounds like it was designed to make them faster.
It was. It was a clear signal that they wanted to maximize synergy and, critically, speed up their ability to make moves internationally with mergers and acquisitions.
Okay, so let's test that theory. Let's see if this new structure actually holds up under pressure. We can jump right to the latest results, fiscal year 2023, which ended in March 2024.
And the results are, as you said, very counterintuitive.
Yeah, net sales are up, but only just 1% to over 1 trillion yen, which is a massive number. But their operating income actually dropped by 10.3%. What on earth is going on there?
Well, that divergence really confirms that their legacy business is still a huge source of volatility. The traditional core, their marine resources segment, its operating income just cratered.
How bad was it?
It fell by a huge 48.6%. That kind of drop shows you that commodity price risk is still a major, major headwind for them.
Wow, almost half the operating income wiped out in one core segment. That sounds absolutely devastating.
It would be. It would be if they hadn't been so successful with their diversification strategy. The fact that overall sales were sort of flat and the profit drop was only 10%.
Instead of something much worse?
Exactly. It's a testament to how two other segments just provided this massive resilience.
So which segments were the counterbalance here? The ones that basically stopped this from becoming a total financial crisis?
The first is processed foods. This is everything from, high-end canned goods, frozen meals, all the way to their booming pet food business.
And how did that do?
That segment's operating income soared by an incredible 68.5%. Year on year.
68%. Okay, so that's proof the strategy is working, but why? Was it just price hikes or were they selling more stuff?
It seems like a mix, but it's leaning heavily on smart manufacturing and high-margin products. We know for a fact their pet food business, especially the operations they have in Thailand, did exceptionally well.
And their acquisitions are paying off.
For sure. The integration of companies like Saigon Food in Vietnam means they can capitalize on really efficient, lower-cost processing. They aren't just selling raw fish anymore. They're selling branded, high-margin, finished goods. And that's where the value is.
Okay, and what was the second surprising hero segment?
This one's even more dramatic. The foodstuff distribution segment saw its operating income go up by 135.7%.
135%. That's wild.
It is, and it suggests they're getting huge efficiency gains in their logistics and supply chain. That's probably the unit management synergy in action. They're just extracting way more value by moving products around the globe more effectively.
So they're shifting from just being a resource company to a sophisticated, vertically integrated supply chain master.
That's the goal. And if you connect that internal shift to the bigger picture, they're clearly leaning into global expansion to get away from relying just on the Japanese market.
Their targets are pretty ambitious, aren't they?
Staggering. They're aiming for overseas ordinary profit to hit 46% by fiscal 2025, and then jump to 54% by 2028. They are betting that a majority of their profit will soon come from outside Japan.
Let's put our geopolitical lens on that ambition then. Starting with China, our sources point to some key opportunities there. But like you said, it's not about just selling more commodity seafood.
No, it's not. They're targeting these really specific high-growth niches that are driven by demographic change. They see China's rapidly aging population, so in early 2023, they started selling nursing and care foods there. It's a very targeted, high-value play.
That's fascinating. So forget fish sticks. They're creating specialized geriatric and medical food solutions.
Exactly. And they're setting up a dedicated sales and management system through their Shanghai subsidiary just to capture that demand. It's a pivot away from the low-margin traditional trading routes.
And it probably insulates them a bit from the political ups and downs of raw commodity trade.
You'd have to think so.
Okay, now let's shift over to the U.S. market. The U.S. frozen food market is enormous. I think it's something like 7 times bigger than Japan's.
It is.
But our analysis suggests we need to focus more on the risks in North America, despite that market size. What's going on there?
The risk there is a classic one. It's a case of having great access to a resource, but then getting punished by the commodity price cycle.
What resource are we talking about?
Specifically, Bering Sea Alaska pollock. Maruha Nichiro has invested heavily there. They've consolidated their position, and they hold about 27% of the entire U.S. quota share.
So they own a huge piece of the pie. That should be a strength.
It's a strength for supply, absolutely.
Yeah.
But it's a huge vulnerability when the global market for that specific commodity collapses. And that's what happened. Despite having all that resource locked down, their North American unit is getting hammered by soft market prices for the key products, which are surmay and fillets. And that flows directly back to that 48.6% profit decline we saw in the marine resources segment.
So the challenge isn't getting the fish, it's the price they get for it once it's caught.
Precisely. They have guaranteed supply, but guaranteed low prices are what's hurting the balance sheet. And that just highlights why Southeast Asia is so important.
Right, because Thailand and Vietnam are driving that processed food success we talked about.
Absolutely. The success of the pet food business in Thailand and the efficient processing from Saigon Food in Vietnam, those are the steady earners. They're the ones paying the bills while the commodity markets are going haywire.
So given that volatility in the core business is just unavoidable, what are they funding now, long-term, to try and secure high-value protein that's completely independent of those wild swings?
They're funneling capital into some really high-tech R&D. The goal is vertical integration and creating new, stable protein sources.
Oh.
And the perfect example, which is just incredibly impressive, is their success with the complete cycle for farmed tuna.
We have to pause on that term, complete cycle. For most fish farming, that just means catching young fish in the wild and fattening them up, right?
Usually, yes.
Why is getting a complete cycle for tuna such a big deal?
Because they aren't just fattening them up. They have successfully managed to get tuna that were born in captivity to then breed the next generation in captivity. Tuna are massive, they're migratory, they're notoriously hard to manage.
You can't just put them in a pond.
Not at all.
Yeah.
It takes incredible mastery of water quality, feeding, temperature. But they've cracked that code. And they've been shipping commercially since about 2015 or 2016. That gives them a high-value product that's completely independent of global fishing quotas.
And that tech leap is leading to new bets, I assume.
It is. Looking ahead, they're investing in things like land-based salmon aquaculture. There's their investment in a company called Atland in Toyama, which should start operations in 2025. That's the ultimate de-risking move taking protein production completely out of the ocean and into a controlled box.
So to fund all of this, the global M&A, the high-tech R&D, they have to keep a tight rein on their finances. What are they doing to reassure investors about that?
They're targeting a much better net debt to equity ratio. The goal is 1.0 by fiscal 2028. That's a very clear signal that even while they're investing in this huge transformation, they are committed to managing their financial risk.
Okay, so finally, what does this all mean for you, the shareholder? How are they rewarding investors through all this turbulence?
They're keeping a stable dividend policy, which is key. The proposed dividend for fiscal 2024 is 60 yen per share. But the real sweetener was an announcement about a stock split and a brand new special shareholder benefit program that's scheduled for November 2025.
So they're making some very tangible commitments to shareholder value right alongside all the operational changes.
Exactly. And their overall strategy also includes flexible buybacks of their own stock. So it provides another way to enhance returns even as they're investing heavily in the future.
So we've taken this deep dive into Maruha Nichiro, and what we've seen is a company that's rooted in these traditional volatile fisheries, but its profit engine has surprisingly moved downstream and overseas.
Right. The real value is coming from processed foods and this sophisticated global distribution network. And that's successfully offsetting this really debilitating weakness in their core marine commodities business.
And their commitment to technology, I mean, doing the impossible with farmed tuna and betting on land-based salmon, plus that aggressive target of over 50% of profit from overseas, it shows they're driving this transformation intentionally. They aren't just reacting.
Now they're trying to build a new kind of company.
So what does all this mean for you? Well, the company is proposing a major change to its identity. They're moving to a new name, Umioni Solutions. And the question to think about is this. Does this rebranding just reflect a transformation that's already done, one that's already proven by that surge in processed food profits?
Or is the name change itself the final catalyst they need to actually achieve that aggressive vision? The vision of becoming a truly diversified global meat and seafood protein provider.
That's something to watch as you see if this new identity can finally bring some stability to their bottom line.